Hello, everyone. Thank you for joining us today, and welcome to this educational presentation where I want to talk to you about something that was first proposed and mentioned to me. That I was actually taught some 5 decades ago, nearly 5 decades ago, on the floor of the Pacific Stock Exchange. And that was a question that my mentor said that I should ask before each and every trade or each and every setup. It didn't matter what strategy I was applying, didn't matter which market or what time frame. And I'm going to share that with you, and I truly believe it will increase your odds for consistency tremendously if you apply it yourself. So this is the only trading question you should ever ask. Okay, so welcome once again. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my presentations, we give these educational webinars each and every Wednesday where I go over tips, techniques, and methods that I've accumulated in my nearly 5 decades of trading. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. Specialist is just someone who made markets, roughly about 50 or 60 stocks. So I made markets during the crash of '87, the bull market that followed. And I left the floor in the mid '90s to manage money, to trade my own account, and also to teach. And roughly about 15 years ago, I teamed up with Pro Trader Strategies, and we formulated specialist trading with one goal in mind, and that was simply to educate traders around the world. So you'll see that attention to detail in today's educational presentation. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using and applying this one question, but please remember that we should in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get more education from us on a daily basis is to first follow us on X, formerly known as Twitter. There's our handle right there at SPCLST. TRADG. You may want to copy that because every day I post upwards of 5 or 6 different posts of signals that our methods have generated, or lots of little bits of financial wisdom and lots of great free information on a daily basis. So please feel free to follow us on X. Also, if you like this format that we are now showing on YouTube, a lot of our subscribers, our followers are watching us there. So please continue to subscribe. Hit the subscribe button. If you're new to watching us on YouTube, hit the subscribe button and we'll have a lot more content for you as well in the coming weeks. Okay, so as I stated earlier, we are a little bit different from other webinars in that our only goal is simply to educate traders, because we feel that's really what's missing from most traders' toolboxes. A lot of traders think, well, I don't have the perfect strategy, or I haven't been trading long enough, or I don't know enough about the markets, or I trade the wrong time frame. Really, those things are minimal. What you really should be focusing on is educating yourself so that ultimately you can make your own trading decisions. You see, it doesn't matter if you have the best strategy in the world or if you are trading the perfect market. If you're taking your trading cues from someone else, if someone is telling you what to buy or sell, you're really still taking yourself out of the game. And that's what leads to most traders' losses. So what we want to do is put you in the game and help you to make your own trading decisions. That's what a good mentor does. So my goal is not to force feed you signals, not to tell you what market to trade, not to tell you whether to buy or sell. It's simply to teach you how to trade with the specialist edge. Now, as I often state, this is the same edge that was taught to me nearly 5 decades ago and what has sustained me now for nearly 5 decades. So hopefully it will be able to do the same for you. Okay, so let's start off with some facts, okay? And I'm giving you these facts not to scare you or dissuade you from trading if you've been having a difficult time, but simply to show you what is real in most traders' environment, but what a lot of people aren't aware of. Because the first fact is that 80% of all traders will lose money. Now, when I say lose money, it doesn't mean that, sure, you'll have a series of losses or you'll have a slump. It basically means you'll lose all or nearly all of the money you've set aside for trading. Think of it. The majority of traders, 80% of all traders, will lose all of their money, their nest egg. Now, this also means that 15% of all traders will break even. I know a lot of traders say, gosh, I'm just breaking even. Well, that's actually no small feat, because you're only in the 15th percentile of all traders. So that's okay. But you're putting in a lot of hard work, and especially a lot of your hard-earned money into this, and you're not seeing any results. Now, ultimately, this means that only 5% of all traders will be consistently profitable. Now, imagine we have 100 people in today's webinar, okay? This means that only 5 of you will be consistently profitable. And if you want to look at it on a different way, okay, we have a pie chart here. We see that large portion in red represents the amount of traders that will ultimately lose everything. That larger, or I should say that medium blue slab you see there, that slice, represents the amount of traders that will break even. And that small little green sliver there represents the portion of traders, the small portion of traders that will ultimately be profitable on a consistent basis. So this leads us to ask a question. How is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, I truly believe, and this is what my mentors taught me, and I truly believe this, that there is an infinite amount of profits to be made, not only in the year and the month, but on a daily basis. It's just like a pie in the sky. You can grab as much as you want, but how is it that only a small percentage of traders are able to capture it? Well, the answer is actually rather simple. These traders, whether they know it or not, have all learned how to be in sync with the trend. Now think of it. This is one of the first things my mentors taught me. You only lose money when you are out of sync with the market you're trading. Because it's very simple and very logical. If the market you're trading, regardless of what time frame, regardless of what system or trading strategy you're using, if the market goes down and you're a buyer, well, you're out of sync, and that's why you've lost money. If you're a seller selling short and the market continues to go higher, you are out of sync with what the market wants to do. So obviously, the secret to this is to want to do what the market wants to do. If the market wants to go up, we want to be a buyer. If the market wants to go down, we want to be a seller. That's what these traders have all learned, and that's what makes them consistently profitable. So, with that stated, let me share with you what I feel is the easiest and most powerful way to be in sync with any market you're trading, any time frame, and any direction. And once you see this, you have to ask yourself a question. So, what if there was a tool designed to have you in sync with the overall trend? Okay? I know we all have gone to webinars or someone's told us, well, this is what you do to get in sync with the trend. You look for patterns, higher highs, higher lows, or you look for moving average crossovers, right? Or you've purchased some $5,000 tool that's supposed to perfectly tell you what the trend is, okay? But what if there was a tool designed that really, really had a high probability for success in getting you in sync with the overall trend? Well, guess what? There is, and we call it the buy-sell line. Now, before you think, oh, okay, well, I'm going to have to spend $5,000 or $10,000 for this, they're trying to sell me this buy-sell line. Well, actually, you have it in your possession right now. You can start using it right now because all the buy-sell line is the 50-period simple moving average. But in order to use it properly, you have to ask yourself this question. This is the question we were talking about. Okay, so before each trade, you have to ask yourself this question. Once you've plotted the 50-period simple moving average, where is price in relation to the buy-sell line? Okay? If you're trading a 15-minute chart of IBM, or if you're trading a monthly chart of Costco, it doesn't matter. You have to have a 50-period simple moving average plotted on that chart. And then ask yourself, where is price in relation to that 50-period moving average or the buy-sell line? Because you'll only come up with 2 possible scenarios. Firstly, if price is above, well, then you will only have a buyer's bias. That's it. You will never go short or bet against the market. In other words, buy puts if price is above the 50. It's that simple. Now, we're not saying if you have a profit, you can't sell. No, that's fine. You can sell. But we're saying to initiate a trade, you should only have a buyer's bias. And conversely, if price is below, then you will only have a seller's bias. Never take buy signals below the 50-period moving average. You should only take sell signals or avoid the market entirely. This will increase tremendously. I know when I first heard this rule from my mentors, I thought, this is silly, this is too simple, and there's no way this can really help me. But I continue to use this on a daily basis, whether I'm trading a tick chart or a daily chart. It makes absolutely no difference. It applies the same way, and it has increased my odds for consistency. If you don't believe me, go back and look at your last 10 or 20 trades And I can almost guarantee you that the reason why you lost money was because you were buying below the 50-period moving average and you were selling short or buying puts above the 50-period moving average. So here's what we want to do. We want to talk about identifying the overall trend and show you some real world examples here. And so I'm going to go and toggle over onto our platform, the PTS Primo charting platform that I developed with Pro Trader Strategies, that actually is designed to get you automatically in sync with the overall trend. And it's extremely simple. We made it very simple for you to apply, and you'll see just how simple it is. So let me just, before we start, remember, everything you're going to be seeing now, all the performance results and all the charts I'll share with you, we have no guarantee that any of the results you're about to see will be repeated in the future. All examples we're going to be sharing with you right now are strictly for educational purposes only. Okay, so let's toggle. Let me find the charts. And if you can see here, we should have a chart of AU. Okay, now this is a gold stock. And as you can see, in the beginning, going back to the end of last year, it's kind of going sideways here for a bit, and then it started to take off, right? How could we have known that? And looking back in hindsight, it's really simple to see this. But, you know, as it was happening in real time, it looked like we were kind of going sideways and then we were about to go lower. Well, here's how simple it is. On our platform, go to the Buy Sell Line tab right here in the Green Strategy tab section. Click it on, and we have numerous ways. Let's go and look at our most popular setting, which we call the fluid buy-sell line setting. All right, we'll just focus on this today because it's the most popular and it's extremely powerful. Click that on, and you'll see all of a sudden the colors change. Now, this line here is just the 50-period moving average, but anything below it we call the red sell zone, and anything above it we call the blue buy zone. So the rule of thumb is when you see 3 to 5 closes either below or above, that automatically tells you what the overall trend is. So we had consecutive closes below, so obviously the overall trend was down here. Sure, we had one bounce above. That was not enough to tell us that the trend had changed. And as you can see, it continued to go lower. But all of a sudden, we have 1, 2, 3, 4, 5 closes. All we need are 3 to 5. It's up to you. And that was telling us right back in mid-January that the overall trend had now changed and that this wanted to go higher. Now, does that mean you just buy at the market? No, this is not a system. It's not a strategy. It's just the best and simplest and most powerful tool I know for getting you in sync with the overall trend. So all you have to do at this point is say, well, if I'm going to be trading AU, if my strategy or my system or whatever I'm trading, even if it's based on fundamental news, is looking at AU or gold stocks, I'm going to be a buyer. As you can see, this happened well at lower levels. The stock was basically trading in the 20s, and now it's almost doubled its price, okay, coming into this past week. Let's look at an entirely different market. This is crypto, Dogecoin, okay? As you can see, it has been heading lower and continues to head lower up until yesterday. Okay, how could the buy-sell line have helped us if we want to get into crypto craze and say, hey, I want to be a part of that? Well, a lot of people have lost money in cryptos. It's very simple, same with anything you'd apply, the fluid, and you can see that this is telling you, going all the way back to the beginning of the year, that you should be out of this particular cryptocurrency. Until you get 3 to 5 consecutive closes above, there's no reason, absolutely no reason you should be involved in buying this. See, what most traders do is they get excited and say, hey, my friend down the street or my brother-in-law bought this, and he says it's going to skyrocket. Okay, well, how well is it doing? If he told you at the beginning of the year, how well are you doing? Okay, you've lost about half of your investment, and now you've turned into a long-term investor, right? Why not just wait for 3 to 5 closes in the blue buy zone and then decide when and if you want to buy it? We can look at a different time frame, an entirely different market. Here's a weekly chart of Costco. Once again, in hindsight, this has been going straight up, right? And this is what most traders like to do. They like to lament or say, gosh, I wish I had known. How come I didn't know that this was going up? Well, if you had applied the buy-sell line on our platform, click on Fluid, and you would have seen all the way back almost a year ago in April, May of, actually 2 years ago, I'm sorry, these are weekly charts. 2 years ago, we had consecutive closes right here, 1, 2, 3, 4, 5, 6 closes. And when the stock was trading roughly about 500, I know it's still expensive, but still, so let's say you wanted to put it in your long-term portfolio or maybe buy some calls, okay? Well, the stock has more than doubled. Now, an interesting thing that you'll see many times is that price will come right down, touch, and then bounce off. So many times you'll see that happen, okay? Regardless of market, regardless of time frame. Let's look at MLGO. Now, the reason I shared that with you is because you'll see that instance in this stock. This stock was basically doing nothing. It's a $1 or $3 stock. Had a big bounce up here, but then kind of just did nothing for the next month or so. Had we applied the buy-sell line, we would have had a better picture because we knew at this point, at the beginning of the year, we didn't want to do anything, but now we have 1, 2, 3 closes above. So when the stock was trading around $4, we could have started to show some interest. And look what happened. It went sideways for the full month, came right down and bounced up again. And bounced up into $30 range, okay? Now, as what happens with so many stocks, they'll start to pull back. And as you can see, this is a current chart of how it is pulling back once again, back to that buy-sell line. Now, is it going to hold there? No one knows. This is not a predictive tool. But if you're interested in buying this, this may be a place to consider buying it. Now, we can also look at an intraday chart. Here's an intraday chart of IBM. Okay, the stock took off, pulled back, and then has continued to go up. This was a 15-minute chart going back this past week. Nothing changes just because we altered the time frame. The same process applied. Okay, we have 1, 2, 3, 4, 5 closes above. So it's telling us that we should buy. And look what happened. It came right down to the buy-sell line. We had 1, 2 closes below. Not enough to tell us that we were back in an overall downtrend, and bounced up from there and has continued to go higher and higher and higher. All right, we can look at gold. Same process applies right here in beginning of January. Consecutive closes above. We've seen it, your spot gold, we've seen it go higher and higher. We can look at the S&P 500, okay? Do you think this could have helped us with the current market conditions, the way the market has really had a strong down move? Because in January, February, we were basically above the buy-sell line until we had 1, 2, 3 closes here. We could have had 5, all right, all around the same price, and you would have avoided all of the downward movement, okay? See how simple this is? But mostly people like to say, well, I want to see what's going to happen with tariffs. I want to see what's going to happen with the administration, or I want to see what's going to happen with economic news or earnings. All you have to do is look at this, and this tells you that you should either be shorting the market or you should be on the sidelines if you don't like to trade down markets. Think of how much money, you've heard so much about people losing money in the current market condition. But if you had known, you would have been out weeks ago or over a month ago, right here, based on this simple indicator, the buy-sell line. You've all heard about how Tesla has been going straight down. Well, prior to that, last year, it was going straight up, right? And then it kind of backed off a bit. But right here, we had 3 consecutive closes, 4 or 5, and the stock was trading around 370, and it lost a good fair amount of its value. Now, will we be a buyer of Tesla? Well, no, because we teach our students you will only have a buyer's bias when price is in the blue buy zone. And right now it's in the red sell zone. So the odds are in your favor that you'll do much better shorting this stock as opposed to buying it. How about Nike? All right, Nike was going sideways until we had 1, 2, 3, 4, 5 closes, roughly about 72, and now trading at 52. Lastly, ALB. Okay, the stock was doing very well, heading higher, higher highs, higher lows until we had 1, 2, 3, 4, 5 closes. You could have taken 3 if you wanted to, roughly in the 90s, all the way down to the 50s. Lost nearly half of its value. And all you had to do was not worry about the earnings. You would not worry about what's going on economically, not worry about what's being announced, or what some guy's saying in a chat room. Remember, our goal as a mentor is to provide you with information so that you can be a part of the process. Remember, we said about most traders take themselves out of the game. They allow someone or something else to make their decisions. My goal as a mentor is to provide you with information so that you can make your own decision. And if you were holding on to this stock, you would have known back here when it's trading in the 90s, around 93, 92 or 93, to exit before it fell a good 40 points in the next 3 or 4 months, okay? So you now see how powerful this tool is, and now you have access to it right now. Any platform you're using, whether it's one of ours or whether it's someone else's, you can plot a 50-period moving average, but you'll only find the buy-sell line the way we have it designed on the PTS Primo charting platform. Now, as I go back to our presentation, let me share with you, first of all, some of the recap of this particular presentation. Firstly, you will have a higher level of consistency if you only buy above the 50-period simple moving average and only sell below the 50-period moving average. And if you don't believe me, like I said, go back and look at your last 10 or 20 trades. It's almost guaranteed that you lost because you were buying below the 50-period moving average and you were selling or going short. I don't mean exiting in a position. I don't mean exiting. I mean selling to bet that it's going lower when price was above the 50. Trading with consistency is a numbers game. We're just trying to give you an edge to put the odds back in your favor. All right, and we have a great special offer for all of you attending today, this special educational presentation. We're going to offer you what we call our Trading Floor Edges course. Right? This is more high probability trading edges, just like I shared with you with the buy-sell line, but tons more that I've accumulated in my nearly 50 years of trading, and you can have them all in one complete package, okay? 2 techniques that elevate your trading, things that I learned on the trading floor. 4 ways to be in sync with the overall trend. Now, I just shared with you one way to be in sync with the overall trend. I'm going to share with you 4 different ways that are equally consistent. 3 steps to a successful and a consistent trade. These are 3 things that you can apply to any strategy, any system. How to fine-tune your entries. So many traders say, Steve, my trading is okay, but my entries are terrible. Usually, I'll enter too early or I'll enter too late. It's the same way with exiting. They'll hang on to a trade too long and then give away a lot of their profits, or they'll get out too early and they'll see the market run that they're trading. Well, we're going to show you how to fine-tune your entries and next level exiting trading. Okay, now all of these things that are in our Trading Floor Edges, a 10-video course, you can apply to any market and any time frame. But here's what I think is the most powerful thing that you'll find in this Trading Floor Edges course. This is our superior candlestick trading edge. All right, a lot of people trade candlesticks, but what I found in 48 years is that most traders trade them incorrectly. I'm going to share with you an innovative way to trade candlesticks. For example, let's look at this older chart in PLTR. All right, the market obviously was going higher. All right, so the way candlestick trading works in the traditional sense is they are reversal patterns. So you're looking for a candlestick pattern that tells you the trend will reverse. So since we are in a current uptrend, we're looking for candlestick patterns to tell us that we're topping out and that the trend is going to reverse and go lower. And here we have 2. The first one was a dark cloud cover pattern, very negative pattern, signaling that we're most likely near a top. And then the granddaddy of them all, the bearish engulfing pattern, which is a very negative pattern. As you can see, it's in the name, bearish engulfing, telling you that most likely the reversal will be to the downside. So let's say you're a traditional candlestick trader. So you would say, well, gosh, this is a sign. I have 2 candle patterns telling me that most likely the trend is going to reverse to the downside. So I think I'll sell. So you decide to sell, you buy some puts, so you short the market, and guess what? It goes higher, right? This is why it's our opinion that most traders fail, because there really isn't a lot of consistency in traditional sense of candlestick trading. Now, using the technique that you'll learn in the Trading Edges course, you would not have sold there at all. In fact, you would have bought right here and potentially captured that nice little up move. You would have seen that with clarity, because this is the superior candlestick trading edge that you'll learn in this 10-video course. Now, we also have one more bonus that we're also going to include. Now, firstly, the Trading Floor Edges cost $9.97. That's how powerful this is, okay? So what we're going to do is discount it tremendously down to $19, all right? That's a tremendous bonus. We are discounting this down to less than $20, less than for the price of breakfast. For even one person, you'll be able to have nearly 5 decades of information that's taken me that long to accumulate. But as I said earlier, we're going to also throw in an extra bonus, and it's this. Along with your purchase of the Trading Edges courses, we will include a 50% discount on any other product we sell, any other system, any other strategy, anything with our platform. You'll get half off just for the $19 purchase of the Trading Edges courses. So if you're having difficulty, if you're struggling with the market, or you're just not seeing the results you want, you owe it to yourself to take your trading to the next level. Here's how to do it. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts. And remember, this is for a limited time only. All right. I would highly recommend giving them a call at area code 598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your order over the phone or answer any question that you may have. Now, that link you see below the phone number is the link that will take you to the info page, but it's not a live link, so you have to copy and paste that onto a browser. But we made it easy. If you click on the little chat icon in the Zoom box there, you'll see a chat box icon there. Just click that on, and they have actually posted a link there that's a live link. Just click that on, and it will automatically take you to the info page and the sign up page, okay? Now, if you have any questions concerning what I just taught you today, what I shared with you, I know most of you are probably saying, wow, I want to go look at my trades here, look at the market and plot the 50-period moving average and see how it could help me. Sure, go ahead. This is what we want to do as an educational company. But if you have questions on anything I went over, just go to the chat box or the question and answer box, and I'll answer them as quickly as possible. Question. So you're saying this can work on any market? Yes, it makes absolutely no difference. Now, I trade intraday charts, okay? I still use a 50-period simple moving average. Someone can use it on a monthly chart of Costco, or they can use it on a weekly chart of crypto or a weekly chart of currency pairs. It makes absolutely no difference. But remember, this is not a system. In other words, if price closes 3 to 4 or 5 times above the 50-period moving average, it's not telling you to buy at the market. Remember, this is not a trading strategy. It's simply telling you that whatever you decide to do with the stock should be looked upon with a buyer's perspective, a buyer's bias. You should not be thinking of going short. I don't care if some guy says, oh, this is so overbought. There's no way it can go any higher. Because trust me, how many times have we seen markets continue to go higher and higher and higher, or even lower and lower and lower? So there's no such thing as overbought or oversold. So you will have a higher level of consistency if you apply this to any market, any time frame, and then act accordingly. Remember, you have to ask that question: where is price in relation to the buy-sell line? Okay? Okay, well, if there are no further questions, remember, please give Pro Trader Strategies a call. This is a great price, going down from nearly $1,000 down to only $19. Think of it. You can't go out to lunch for less than $50 these days. $19, you're getting nearly 5 decades of information, tips, techniques, and edges that have taken me that long to accumulate, and they're yours for forever. They're not something that you have to, they disintegrate after a month. They're yours to go back and use whenever you like. This is a 10-video course. The videos are yours. You get the links to watch this information. And you will get my personal email address. So if you have a question or something is a little difficult to understand, most likely it won't be, but you just want to ask me a question, you can ask me anytime you like and contact me, because now you'll be a student of mine in the Edges course, okay? Okay, so be sure to give them a call to take advantage of this. This is a limited time offer only. As we close up and take one last look at our disclaimer, I want to just say thanks for attending today. I hope you really learned something, most especially about how we really want to educate you. That's our sole purpose. As you can see, we're not trying to sell you something for $5,000 or $10,000 the way so many other webinars do. We really want to educate you to make sure that you can take your trading to the next level, okay? Thank you so much for attending. I wish you all the best of luck and hope to see you in class. Thanks so much. I'll see you next time. Bye-bye.